Hi, I'm Digital Ken, your virtual host. And in just a moment, you're going to hear from the real Ken Gulliver in a powerful, no fluff webinar originally recorded on March 12th, 2025. Now, this isn't your average crypto hype session. Ken walks you through exactly why XRP may be one of the most undervalued digital assets on the market right now. From its real world utility and global payments to institutional adoption to legal clarity, most investors are still overlooking. You'll also hear how XRP fits into the much bigger financial strategy, how it could serve as a potential hedge, an income opportunity, and a smarter way to diversify in an uncertain market. So grab a pen, get focused, and get ready because the real Ken is about to break it all down. We're going through a moment in history where we're going through some radical changes. We back in the 70s, we actually late 60s, in the state of California, what Bank of America did was they did a localized mail drop of 10 to 20,000, what back then nobody understood was a credit card. And, we'd go to Kmart and put things on layaway before that. But now here's this credit card that comes in the mail, and people were told that they could use this at certain retail shops and purchase things, certain participating retail shops. And they did. And it was a good test. And today, well, most Americans have credit card problems. The collective nation is over $1 trillion in credit card debt alone. It's kind of a horrible thing. And we all know kind of the downsides of credit and credit cards and how that can get us in trouble. But what happened back then is it changed the landscape of how we do business, and companies like Visa, MasterCard, American Express, even Tully Savalas, the Diners Club, if any of y'all remember that. All of those cards, plus Discover and many others, the rates of returns that people got for investing in that technology were off the charts. And the banks were off the charts in terms of rate of return if you bought into the stock. And what happened back then in tandem with that was a system called the SWIFT system. Does anybody know what the SWIFT system is?
No.
So what the SWIFT system is an archaic technology that helps us transfer money digitally. So, we have the luxury of enjoying, sending money by Zelle or EFT or something like that. We have the luxury of doing that just super, super quick. But there's a downside to it, and it's a big, big, big downside, and it costs us billions of dollars a year. And moreover, it costs the banking system, the individual banks, hundreds of billions of dollars a year. I'm so sorry for coughing in everybody's ear. It's why I'm going to the pharmacy tonight. So the SWIFT system is this archaic form of money transfer system. Now, in 2008, when we had the back-to-back years where the stock market was down about 50% in 2008, 2009, and the subsequent real estate crash, we had runs on the banking system. There was the whole anti-Wall Street thing that was going on. Or right about this time, somebody by the name of Satoshi Nakamoto, nobody knows who he is. I have some theories on that, but Satoshi Nakamoto wrote some code. And what that code was originally, if you read the white paper, anybody can Google it. You can just say, Satoshi Nakamoto white papers. And what those white papers were a point-to-point payment system that allows us to transfer money like that, do it cheaper, and also settle out. Well, that technology we all know as Bitcoin. And Bitcoin over the years, the last 12 years or so, has proven that it does not make a good P2P payment system. And so the narrative has changed on Bitcoin. So Bitcoin became this store of value, like gold. And it does serve that purpose, and it has been doing a pretty decent job of that. About 5 years ago, I was standing on my soapbox, just like I am tonight, standing on my soapbox, and I was telling everybody that could scrimp and save and do whatever they could to buy at least one Bitcoin. Back then, Bitcoin was priced anywhere between $6,000 to $8,000 when I was screaming from the rooftops about it. Today, it is worth over $80,000. Now, from Bitcoin, there's t over 10,000 cryptos, Web3 cryptos, meme coins, tokens, all kinds of stuff. And when you think about everything that's out there, and you hear stories of people like me where I say, hey, I bought Bitcoin at $6,000 and now it's over 80,000. And so and so back then, when that was happening, you look at the landscape of everything and you say, well, Ken, there are 10,000 plus cryptos out there. Which one do I invest in? And what I like to talk about usually, and Emery, I don't know if you've heard this, Brandon, I think you probably have, but I like to tell the story of, I got some pictures. I'm not going to bring it up right now, but there's a picture of Fifth Avenue, Wall Street in the year 1900, and the street is filled with horse-drawn buggies and carriages, and a lot of people on the sidewalks. And in that picture, crowded street of horse-drawn buggies and carriages, there's only one combustion automobile. 13 years later, the same place, Fifth Avenue, New York City, there's a picture taken, and the street is crowded, only this time everything is combustion automobiles, and there happens to be one horse-drawn buggy and carriage. In 13 years, our lives were upended. They forever changed over the course of 13 years. And back then, when I usually ask the question, I like to ask people, how many automobile makers were there? I usually get the answer 3. And that's because we have recency bias. We know Ford, Dodge, or Chrysler, and General Motors. And we think about that. So we think, well, maybe there are only 3 automobile makers. There's, not many cross the pond either. You got Honda and Lexus and Toyota, and then you got like the 2 big Germans and whatever. There aren't many automobile manufacturers. And today, when we look back at how exciting the automobile industry was back then, where you could become, super, super rich buying an automobile maker's stock. 2 things: you could become very, very wealthy, but the truth is that there weren't 3 stocks to pick from. It was a lot more complex than that. There were over 100 automakers back then. And so the same question back then needs to be asked today with crypto. And when you look at the 10,000 crypto, you have to ask yourself 2 very important questions. Number one, out of all the cryptos, let's say this is a box that represents all the cryptos, all these little dots here. These are all the cryptos in the known universe. And you might ask, well, Ken, how do we know where the golden nuggets are in all of this? The golden nuggets being the winners. And to that, I would say, we have to ask 2 questions. Number one, does the crypto that you're thinking about, does it solve a real world problem? And number 2, does it have real world paying customers? And right now, there's really only a few of them. If you can answer these questions successfully, what you in effect do is you wipe out most of what would be bad investing decisions. Because the vast majority of crypto today, it can't answer these two questions. Does Bitcoin solve a real world problem? Yes, it does. How does it solve a real world problem? Well, if you're a multimillionaire and you have 100 pounds of gold and you want to travel, are you going to travel with it? No, it's heavy, it's dirty, you need security guards. And when you go to a country, like I know Costa Rica and most other countries for that matter, if it's not confiscated from you, which they would love to do, if it's not confiscated, then they're going to charge you a VAT tax. And that VAT tax, which is value added tax, VAT, a VAT tax, is going to be between 10 to 15%. Not to mention, it's very expensive to buy and very expensive to sell. A lot of people don't know this. If you buy gold or silver, you better hold on to it until at least it has a 20% return. Otherwise, you're just paying the trading fees. But does Bitcoin solve a real world problem? Sure. Because in the real world, I can hold my store of value. Bitcoin acts like it acts like gold in the sense that it has a store of value and it is finite. There's only 21 million that's ever going to be mined. The vast majority of it's been mined, so there's scarcity in it, and you can carry it in a little digital wallet, which I was looking for just a second ago. I think I have it in my room. So it's easy to carry, it's easy to transfer, and it still does work for P2P payment, just not very good because it's not very fast and not very efficient at transferring money at scale, let's say. But it solves a real world problem from the standpoint or the point of view of super wealthy people. But it also solves it has a real world problem solution in the sense that there are countries like in Venezuela, Argentina, well, not now since Melee took over, but Argentina up until a year ago, in Africa, in countries who have hyperinflation or whose banking system is weak or their sovereign currency is very volatile. So, for example, in Venezuela, it's far easier for me, instead of going down the road with a wheelbarrow, and I'm not kidding, a wheelbarrow full of cash to buy a loaf of bread, you can just say, hey, Mr. Baker, why don't I just send you 0.00001 Bitcoin? I can do that digitally from my wallet to your wallet, and you can give me some bread. That way, we don't have to worry about this, this fiat currency that our government has issued. And it solves that problem also. How does Bitcoin have real world paying customers? Well, the way Bitcoin works is that every 4 years it goes through a halving. What that means is that every 4 years to create or mine Bitcoin, just like we would mine gold, the deeper we dig, the more equipment, the more technology, the more people we have to pay. It becomes more expensive the deeper we dig down to find an ounce of gold. And that's how gold's price goes up. It becomes more finite, becomes more expensive to curate or unearth. Well, with Bitcoin, it's the same idea. And if you look, mining, a Bitcoin mining operation looks something like this. You can see these pictures right here. These are racks of computers, and you can see the scale of this human right here, and all these computers, and there are tons of operations like this around the world. These operations cost millions and millions and millions of dollars just to get the equipment to start up. And the reason why they need this equipment is in the sense of how Bitcoin is mined. Well, instead of picks and shovels to get gold, how do we mine Bitcoin? Well, we mine Bitcoin by solving an algorithm. And so if you can imagine, all of us are little kids in kindergarten, and the teacher says, okay, students, you've got a piece of paper and a pencil at your desk. When I say go, flip over the piece of paper. There's a math problem, and I want you to solve it. The first one to solve it gets a little gold Bitcoin. And she says, go. We flip the paper, and lo and behold, it's a simple math problem, 1 + 1. And the person that raises their hand, congratulations, you got a gold Bitcoin. And then the next test is maybe subtraction. Then the next test is multiplication, then division, then simple algebra, geometry, and so on and so forth, all the way up to calculus. Well, it's the same thing for these miners. What they're doing is they're solving complex algorithms, and those algorithms every 4 years, and we just went through a halving, every fourth year is a halving period. And what happens is the algorithm gets twice as difficult to solve. And so what that does is it increases the price of Bitcoin. It becomes more sought after because it becomes more difficult to mine. And so Bitcoin does have real world paying customers in the same sense of gold. You have these gold miners that mine the gold and they send it off and sell it to industry, to jewelers, to computer makers or whatever, and they use the gold for those things. Well, it's the same thing with us and Bitcoin. The miners solve for Bitcoin and they sell it to retail or institutions that might own a mutual fund an ETF, an exchange traded fund that's denominated in Bitcoin or backed by Bitcoin, that we can go to Schwab, and Emery, you know this, or you can go to Fidelity and buy spot Bitcoin ETF. And in that sense, Fidelity makes money. So it does have real world paying customers. There is another crypto that solves a real world problem and has real world customers, and I'm going to call that Ethereum right now. And basically, the technology is what most of all the other apps, the thousands of other apps, run on the rails of Ethereum technology. So if Bitcoin is digital gold, Ethereum's like digital oil. So if you needed to transport something, you would get in a vehicle, a truck, a van, something like that. And what do you need to operate those? Oil, fuel. And that's kind of what Ethereum is. I'm not going to go into this a lot because I want to skip over due to time, and I want to jump right into XRP. Now, XRP, I want to go back to this problem with Swift. 50 years ago, Swift solved the problem of digitally paying somebody in an instant. But what they didn't solve is the settlement of those transactions. Okay. And so what XRP set out to do about 12 years ago is they set out to solve the settlement. So they are in the business of the transfer of money at scale, at speed. With Bitcoin takes 9 minutes to settle out a transaction, like 9 minutes to settle out 10 transactions. XRP can settle it out in a few seconds and do it at 1,500 at a time, every few seconds. Wow. Super fast, super energy efficient, super cheap, and XRP has solved that. Now, did they solve a real world problem? Let me put this in layman's terms, how they solved this problem. So for almost 18 years now, I've been sending my mother-in-law money. Every month I send her money, and I've had to send it by Western Union, different various forms, through banks, wires through the banks. I've tried all different kinds of ways, and usually I can't get away with sending her money for anything less than $50 when I send it to her in Costa Rica. And the problem with that is I can send it immediately, but the fastest she's ever gotten the money in her hand is like a few days later. That's kind of a problem. And the longest it's taken, I forget, I'm going to lie right now, but it's somewhere between 10 to 14 days is the longest it's ever taken. And so that's problematic because it's very inconvenient. It's hard to know what you can rely on in terms of getting money in your pocket so you can live your life. And so what XRP does for the little guys like me, like us, is it helps us send immediately, settle immediately, so that person has it in their hand in seconds, not days or weeks. They have it in their hand in seconds, and it doesn't cost $50. It doesn't even cost 50 cents. It costs a fraction of a penny. And so it solves a real world problem for us, the little people, but it also solves a real world problem for the banking institution, all the banking institutions out there. And so And so the way it solves their problem is, you can imagine, we've all heard of Forex, right? So everybody knows what Forex is. You got the Japanese yen, and you might have the US dollar. And what people like doing is arbitrage. Like, they'll buy the dollar and then sell to the yen. And there's always a discrepancy between pricing, what they would settle out one to the other for. And so there's money to be made on that. But that Forex markets exist because of inefficiencies in our monetary system. And so what happens is, when I send money to my mother-in-law, for example, I might send it, let's say, from my credit union stateside. Well, my credit union doesn't have a relationship with banks in Costa Rica. And so my credit union has to send the money to, let's say, Bank of America, because Bank of America has a relationship with Banco Nacional in Costa Rica, but my mother-in-law might have Banco de Costa Rica. Okay. And so it has to go from my credit union to B of A to Banco Nacional to Banco de Costa Rica. And in doing that, you can imagine the friction. They can send it digitally at speed, but then there's the matter of settling out. What was the dollar valued at this point versus 0.2 versus 0.3 and 0.4 finally? And somebody will always be the loser in this round robin, so to speak. Somebody's always going to be the loser. And so when you add it up, there's over $1 trillion a day. Now, I don't know if everybody understands the magnitude, how much $1 trillion is, but if you took $1 trillion $1 bills and connected them end to end, it would go from the Earth to the moon and back, I think, 9 times. That's how much $1 trillion is. And so there's $1 trillion a day transferred in the marketplace around the world. And the banks, with all that transferring and all that settlement, the banks lose out to the tune of hundreds of billions of dollars a year. And so there's a lot of friction and a lot of lost money in that. And so if there's a technology that solves the settlement problem of finance, well, then it solves a real world problem, both at the little retail side and the institutional side. And the other question is, does the technology have real world paying customers? And I think you'll see here in a second that, yes, Ripple, the company that produced the XRP coin, Ripple has over 300 and rapidly growing institutional customers. They're a huge player, a multi-billion-dollar corporation. And I'm going to tell you a little bit more about Ripple here in just a second. But before I do that, I want to give kind of a visual of what Ripple does on not just the retail, not just the institutional, but also at the governmental level. And so Ripple, the XRP coin with Ripple, is in the process, in the making right now, and they are the only one that has the contacts and the clients to do this at this point. They are going to be the new world bridge currency, not the new world currency, the new world bridge currency. And what I mean by that is this: if you have, let's say, 4 different countries, to be a sovereign nation, you need to have your own currency. And so the British pound, the dollar, the Costa Rican colony, the Japanese yen, all of these countries are sovereign nations. They have to have their own currency. Now, when they transact within the walls of their country, everything is fine. It's not until they try to transfer that they run into this multi-stage bleeding process, bloodletting process. And so what XRP does is it sits on the walls of these, kind of think of it as freeway on-ramps and off-ramps. And so what happens is it goes through here, goes through the technical, or the XRP process algorithm, and XRP sits on the wall between all of these governmental entities also. So when a third point in all of this that you'd have to ask yourself also if it's a good investment opportunity is what's the scale of the opportunity here? Like what's the marketplace? Like uh, for Bitcoin, what's the scale of the marketplace? Well, probably to the tune of what the gold marketplace is, or gold and silver, which is not that much. In the scheme of things, it's a small percentage of the world's GDP. Um, you can have things like Microsoft computers, which was really a first world, they could only sell to first world people that could afford it. Now, a lot of people have computers, but more than that, they have cell phones. But when you look at the opportunity, the size of opportunity of any company, whether it's NVIDIA that produces the chips or the processors that process the Bitcoin miners, for example, that mine Bitcoin, or Coinbase or Tesla that produces electric vehicles, you look at every company in every industry, and I'm here to tell you that the opportunity doesn't get any bigger than the world's monetary transfer on a daily basis, $1 trillion. We just recently had, for the first time in the last handful of years, the world's first companies that are valued at $1 trillion or more total value. XRP has a marketplace where there's $1 trillion a day, every day. It doesn't get any bigger than this in terms of the opportunity, because every time a dollar is transferred and it uses the technology rails of Ripple through the XRP coin, a little bit of Ripple is burned, XRP coin, or a little bit of XRP is burned, and that XRP coin becomes more valuable because there's less supply. And then therefore the price goes up. And also Ripple, the company, makes money on those transfers too. Even though it's pennies, they're looking for hundreds of billions of dollars a day. So, and pennies on the dollar, you could do the math. It adds up and adds up really big. Now, I want to show you. Oh, here we go again. Wow. Technical difficulties, sorry. Okay, everybody can see my whiteboard again? Okay. There are two ways that you need to look at an investment. You need to look at the fundamentals of an investment, and you need to look at the technicals. I'm going to start with the fundamentals of the investment. And I want to talk about first, there was a lawsuit. About 4.5 years ago, the Securities Exchange Commission sued Ripple. And the reason why they sued them is because of a test that is known as the Howey test. And the Howey test was an old farmer, an old guy by the name of Howey, that had orange groves. And he wanted to raise some money and change the way he ran his business so it was more profitable. And so what he did was he sold tracts of land for his orange groves. He sold them, leased back the land, and harvested the oranges and took the profits of the harvest every year. Well, the SEC came in. There's a 4-pronged test that determines whether something is a security or not. And they determined that old man Howey was in violation of the SEC laws, and they slapped a fine on him, and he had to undo what he was doing. Well, almost 100 years later, we enter crypto. And crypto is a new industry, nothing like what Howey did. And so what we needed was something of the sorts of a Ripple test. So about 4 or 5 years ago, I was buying Ripple at like 50, 60 cents a coin. And when the lawsuit first happened, it dropped down into the 20-cent range. And I remember everybody back then, Ken, the sky is falling. XRP is going to zero. We're going to lose everything. And a lot of people stayed, but some people got scared and they took their money out. And I told them, I said, hey, you guys, you can sell. I'm going to be buying. And I've been buying more. As a matter of fact, so far this year, I've bought $100,000 more of XRP just since January 1st. And I've been buying it since 2001. And I can't get enough of it right now. It's my single largest investment holding. And so So they were claiming it's going to zero, and I told them no, it's not. And because you can look online, and if you look on a graph, and let's call this D-Day, you can see all the wallets. These are like the top 10% of wallet holder XRP holders, the top 5%, the top 3%, 1%, half a percent, 0.1%, and 0.01%. And these are the wallets that hold like a million XRP or more. Well, what was happening during this time is people were getting scared. If you look at the wallets, how much they held in XRP, it was kind of stayed steady. But when the lawsuit hit, whoop, everybody dumped. Staying steady, whoop, they dumped. Dumped, dumped, dumped. And what I told everybody is what I'm doing, just like the big guys, when everybody else was selling, the smart money was buying, and you could see their wallets increasing with their holdings. One of the beauties of crypto is it's transparent. You can see transactions and stuff. So I was telling people back then, I'm stacking my pennies next to their dollars. And I was. And my average cost basis for XRP back then was probably around 47 cents a coin. And just recently, XRP went to $3, just shy of $4, actually. It broke the previous all-time high, $3.40. And I'm going to talk about that here in a second, but I'm going to get to the technicals in a bit. But the reason why I bring up the SEC case is because when everybody said that the sky was falling, what my contention was is I told them the sky is not falling. This lawsuit is very, very necessary. And they'd say, well, why is that? And I would say, well, with any new industry, you need to be able to regulate that industry. And the way you regulate an industry is by court precedents. And you can't have court precedents unless you have a lawsuit first. Well, there's never been a lawsuit. And so what the SEC did is they picked on the biggest United States cryptocurrency, that's XRP, and Ripple the company, and they sued them. Now, there's something in the legal industry called a tolling agreement. And Ripple had a tolling agreement with the SEC. And the SEC, I forget the exact number, but the SEC said, hey, if you just give us $1 billion, all this will go away and you go on with your merry business. And the CEO, Brad Garlinghouse, and lead counsel, Stuart Alderati, them two, plus the whole board of directors, they voted and they said, you know what, we're not going to do that. We got deep enough pockets and we believe we're in the right. We're going to go head to head with you. Well, this thing has lasted 4 years. And I'm one of the few crazy people that actually was calling in to the court hearings. I'd call in and listen to it. And some of it was actually pretty entertaining. But what I can tell you from sitting in on all those court hearings is that at 9 times out of 10, Ripple mopped the floor with the SEC. Judge Torres ruled that in favor of Ripple. SEC, as expected, they appealed it, went to the appellate court, and it's been in the court system for that period of time. But what's happened now, all of this was spearheaded by Gary Gensler. He was the SEC chair. When President Trump got elected, Gary Gensler resigned for good reason, too. And I'll get to that here in just a second. And when he resigned, Paul Atkins, who is in the process of taking that position, is super, super pro crypto. He loves cryptocurrency. And the SEC case is probably going to be ending sometime in the next 30 to 60 days, is my guess. It could be tomorrow, but I'm suspecting it's between 30 to 60 days from now. And when that case ends, there have been a couple of other crypto companies that have nowhere near the practicality that XRP has. They got sued by the SEC also. When their lawsuit was over, the coin surged 2,000% when the case was over. It's my suspicion that in the next 30 to 60 days, after 4 agonizing years, that this SEC case is going to be settled, which is very important, not to be dismissed, but settled. Because if it's settled, then they will be the only crypto in the world that has SEC. They get rubber stamped or green stamped by the SEC. They can never be touched again for the whole notion of, you're a security or. So it's all open, blue water, blue ocean from that point on. Gensler's out, Paul Atkins is in, and Paul Atkins is pro crypto. The whole Trump cabinet, including Donald Trump himself, pro crypto. Matter of fact, Donald Trump owns about $5 million of XRP. The Congress now is pro crypto. The Senate is pro crypto. And on top of that, you have 300 plus institutional clients. We'll get to the ETFs here in a second. 300 plus institutional clients, so real world paying customers. And these aren't just any kind of customers. These are the likes of Santander Bank, who is the Bank of America of all of Hispania. They're a huge bank. A Brazilian bank just launched the world's first XRP exchange traded fund just about a week and a half ago. Their other clients are not just Santander Bank. It's the likes of Wells Fargo, American Express, Bank of America. And Bank of America, by the way, just filed 5 patents. And in those patents, the name Ripple and XRP occurred 5 times. Those patents are for Ripple's technology. They are using Ripple's technology. Japan, all 200 of the banks in Japan are riding on the rails of the Ripple technology. All of them. Recently, if you haven't noticed, Garlinghouse, Stuart Alderati, and Trump, they met at Mar-a-Lago and they had dinner. This is them. This is Brad Garlinghouse. This is Stuart Alderati. And by the way, Stuart Alderati is lead counsel that's taken Ripple through this last 4 years of lawsuits. And the cool thing about this is a world-class team. One of the fundamental reasons why I love Ripple is they're a world-class team. Brad Garlinghouse is a top-notch CEO. Stuart Alderati used to be a Securities Exchange Commission chair, so he knew their games. And did I mention Rosie Rios, who is a former treasurer of the United States, the person whose signature is on our money? She sits on the board of directors of Ripple. These are the likes of people. These are the type of people that make up the company Ripple. It's a very, very important company. Now, on top of all of those things, we have 17 companies who have filed for a spot XRP exchange traded fund. Now, these filings are on the desks at the SEC right now, waiting for approval. They are not going to get approved until the case is finished, more than likely. They're going to let the case settle. And then after the case settles, I'm suspecting somewhere between July and September that these ETFs will be greenlit. Now, this is very important. These aren't just any companies, because I can go start an ETF if I want to. No, these are companies the likes of Franklin Templeton. Franklin Templeton is almost in every 401k in the United States as an option. Franklin Templeton is the 6th largest private wealth manager in the world with $1.6 trillion of assets under management. And this is very important in terms of price movement. And I'm going to talk about that now. I'm going to talk about the technicals now. And we're going to talk about price movement. So we're coiled up 7 years. We're testing the all-time high, and we've got 17 ETFs. No other crypto, well, there's only 2 other cryptos, Bitcoin and Ethereum, that have spot ETFs. And Bitcoin by far has the most ETFs, but there's only 12 spot ETFs for Bitcoin. And Ripple hasn't even gotten out of the lawsuit, and there's already 17 applications in from world-class money managers. Franklin Templeton's not the only big one. BlackRock, the world's largest. Grayscale, which was the world's first crypto ETF, they're huge, and a whole bunch of others. Wisdom Tree, so on and so forth. So let me talk about the technicals now. So first off, the price of XRP has been coiled up for 7 years. What do I mean by that? Let me go share my other screen. And I'm going to share with you the chart. Let me think. Let me see. Let me think about which chart I want to show you. It might be easier. I'll show you this one. This is the price of XRP on a weekly time frame, the weekly closing price of XRP. Now, excuse me, something very, very important that if you know anything about stock trading, you'll understand that there are all different types of formations that you can look at that are telltale signs that a stock or a crypto or any investment is in getting ready to break out to the upside or break to the downside. And one of the most bullish indicators is what's called a bullish pennant or a bull pennant, which is this green line right here at the top and this green line down here at the bottom. Normally, when you're looking at bull pennants, you're looking at time frames of weeks, maybe months, not years, not 7 years like this. And so to help you guys understand this, I want you to go back to your childhood, maybe when you're taking a bath when you were a kid, you remember like grabbing onto the bar of soap and you squeeze the bar of soap and it would pop out from your hand. Well, that's what a bull pennant is the pricing movement. What's happening is the pricing movement, it's very loose. It bounces around. It tests the top and the bottom, but it respects the top and the bottom. But as it closes in, the frequency starts getting greater and the pressure starts getting greater. Bing, 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 like a pinball, bounces around, and then boom, you're seeing it right here. It broke out violently. But the cool thing is that before in 2017, XRP price hit like $3.40 was its all-time high back then. The next bull market in 2021, the price only hit like $1.96. Why was it hamstrung? Well, this is exactly the time the SEC lawsuit happened. So it never had its opportunity to really break out. So it went and did its thing since the lawsuit was launched. But now it's broken out again violently. And I want you to notice something that's very important. And this is another very important technical indicator. And it's this orange line that we're drawing straight across. The orange line that you're looking at here is the previous all-time high. Now, I want you to think about football for a second. And I'm sorry if one of you or all of you don't really follow or understand football very, very much, but let me try to explain it to you. When you have in football, you have on the defense, you've got, the defense lined up over here. And then you've got like the cornerbacks out in the backfield. And then you have the offensive line lined up on the other side. And over here, you have like the wide receivers and you've got the quarterback and then you've got the running backs. Well, when the quarterback hikes the ball, the ball's hiked, and the quarterback, let's say, hands off to the running back. And the running back proceeds to run up the middle and tries to break through the line of scrimmage and then go beyond that for as many yards as he can muster up. What is the most resistance that running back is going to face? Is it not the line of scrimmage? It is, right? This is where everybody's trying to shut him down at the line of scrimmage. But what happens when he breaks through that? He's easily got 3, 4, 5, 7, 10, 15 yards that he can run before they catch up to him. So he has a bit of a breakout. Well, stocks and crypto pricing movement is just the same. We just attempted our breakout from the previous all-time high. We got rejected, and we've been testing it back again. Right now, the previous all-time is resistance. But I'm telling you something. When it breaks through, it is going to go on a run that it will make everybody think that it's not real. And just an example of that, if we look at the previous all-time high from this breakout in 2017, right here. Yeah, let me take the magnet off. Right here, when Ripple broke out from this previous all-time high at 45 cents, it rallied from that point 676% in 21 days. Now, from a technical standpoint, if we run 671%, we would be that puts us at about $23 a coin. And what that means is right now, XRP being priced at about $2.20. If you put $10,000 in XRP, that is going to buy you about 4,545 XRP coin. By the end of this bull run, which should be towards the end of this year, if not early 2026, that 4,545 XRP coins at $23 is worth $104,545. Now, these are just charts and lines, and I'm going based on the past. I have explained to everybody that it's coiled up for 7 years. I've never seen a technical this bullish in my 27 years of vetting out stocks or other investments. This is the most bullish chart I've ever seen right here. The next thing is that we've been testing this previous all-time high, and that's a technical too. But all of this is just kind of conjecture. Oh yeah, Ken, you draw some lines on a chart and this, that, and the other thing. Let me tell you one last thing that is maybe will sit a little different than this right here, which might just be conjecture and theory. Let's talk about the ETFs for just a second. So JP Morgan is amongst the companies that have filed for an ETF. Excuse me, Goldman Sachs. Let me see if I can find it fast enough. I can't find it fast enough, but there is an article, and it kind of doesn't matter at this point. Let me share my whiteboard because I want to do a little math with everybody. And then I'm going to close out with this. So Goldman Sachs, there was a piece done very recently, a few weeks ago. Goldman Sachs filed for their ETF, and they said it's not just an XRP ETF, but they also filed for a Solana ETF. Solana is a crypto also. And they said that in the year 2025, from the time their ETF launches, in the first year, in 2025, they believe that they could garner or bring in about $8 billion of assets under management for XRP alone, 16 billion total. $8 billion. Okay, well, that's one ETF. There are 17 of them that have just as much power to bring assets under management. So if we look at 17 ETFs, I want you to think for just a second. Let's be super conservative and say that each one of them, let's say that they're not going to bring in 8 billion, 7, 6, 5, 4, 3, 2 billion, but 1 billion. And let's say that all 17 ETFs don't even get approved this year. Let's say only 10 of them do. That's about $10 billion of inflow. Now, this is where we really, really, really can understand the future pricing of something, and that is what's something called net inflows of an asset. And so I'm going to take you to CoinGlass, and CoinGlass right here. This is CoinGlass. It's one of the many websites that you can see. They offer tools and insights on different crypto. And what we're looking at right here on CoinGlass is the XRP spot data analysis. Why is this important? Well, it's important to understand spot inflow, outflow, and also the market cap. So if we scroll out, if we zoom out on the changing market cap, and let's take a time period like I don't know, January, the beginning of the year, let's say. And can I get some help from one of you or a couple of you? Does somebody have a calculator at hand? And
I'm on it.
and okay, thanks, Brandon. Appreciate it. Anybody else have like maybe a pen and a paper? And if you could kind of follow along with me, what I want to do is I want to talk market cap for a second, because we want to know what moves the price of XRP. Well, it's something called net inflows. It's all of the deposits or all the people buying a stock or a crypto minus all the people selling that same stock or crypto, and whatever the net is, whether it's negative or positive, that is the net inflow. Very simple math. And so I want to go from a time period, let's say, I don't know, let's go with January 12th right here. And I want you, let me zoom out a little bit. January 12th. Right here. 12th. So the market cap right here from the 12th of January, and the price, let's look at the price.
It was 57 cents.
Hold on a second. It'd be helpful to get to this year.
Oh,
this is in 2024. Recent data is always kind of nicer. Okay, so let's go to January 12th right here, and we can see the price is $2.51. Okay, so if somebody can write down January 12th, $2.51, and then let's just take this out, I don't know, 5 days, and go to January 17th. What's the price of XRP? $3.30, January 17th of this year. And if we can put a calculator to it, $3.30 minus $2. I'm sorry?
581.
No, $3.30 January 17th price minus January 12th's price of $2.51. What is that?
79 cents.
79 cents. Okay, 79 cents. Now, okay, we know that the price of XRP moved 79 cents during this 5-day period, but what moved the price? Well, the net inflows did. So let's go take a look at the net inflows. Now, the net inflows, if we go to January 12th, and this is where I'm going to need well, maybe we can just do a calculator here on this. So Brandon, if you could follow this, if you look at the green little dot in the pop-up box, net inflows were 4.92 million. Can you punch in 4.92 million on the 12th? Yep. Okay, now I want you to add the next day, which is 29.41 million.
Yep.
And then the next day, 207.23 million.
Yep.
And the next day, 64.96 million.
Yep.
And the next day, 7.25 million.
Yep.
And then the last day, subtract 74.34 million. We had net outflows.
239.43.
Okay, so we know that $239 million of net inflows moves the price of XRP by how much? 79 cents, right? Make sense?
Mhm.
Okay. Now I want to go back to the whiteboard and I want to get over to these ETFs again. These are the floodgates that are opening up. 10 out of 17 ETFs get green lighted. Let's say by the summer of this year, August. And we have August, September, October, November, and December. 5 months left in the year. And out of those 5 months, those 10 ETFs, they don't even bring in $1 billion each. They bring in $500,000 each. Excuse me, $500 million each, 500 million each. And when we add it all up, that brings us to net inflows, net positive flows of 5 billion. And let's say that there were 20% of that is outflows. $1 billion were in outflows. So we got 4 billion net inflows. Brandon, can you calculate $4 billion divided by 239 million? That's going to give us a multiple.
About 16.73.
Okay. That's 239 million goes into 4 billion almost 17 times. 16 point what?
16.73.
Okay, let's call it 17. So
Yep.
17 times it goes into 4 billion. Well, if we know that 239 million moves the price by 79 cents, what's 79 cents times 17?
13.22.
$13.22 plus its current price of $2.22, almost 16 bucks.
15.44.
15.44. And if you bought $10,000 of XRP at $2.20 right now, that's 4,545 XRP times $15.54. That turns into $70,636 in that what I would call a very modest assessment of what the reality is going to happen. Now, I have routinely told, and I've told people, I don't say this very often, but I'm telling everybody, mark my words. XRP in the next 4 to 5 years is going to be a $100 coin. And it's not too far off to see if we've got 17 ETFs and each of them only bring in 5 billion. What's 5 billion times 17, Brandon?
17 times 5 billion. Going to be 85. 85 billion.
85 billion? Yep, that's right. So,
Yep.
and then what's 85 billion divided by our 239 million?
3.55.
That's 355 time multiple.
Yep.
239 million goes into 85 billion 355 times. And if we know that 239 million moves the price 79 cents, well, pretty easy math. 355.64 multiple times 0.79 gives us a $281 XRP coin. And I suspect that even if we have a huge shakeout and go into a recession next year, that's fine. Doesn't bother me at all. That gives me more opportunity to gobble up XRP. But if that happens sometime in the next 4 years, XRP is going to be back at that 17 ETFs, $5 billion each, probably more than that. XRP will have mass institutional adoption, and it will also have mass retail adoption because you'll hear about it all over the place. You'll hear about it at Fidelity, Charles Schwab. You'll be able to transact the ETFs. It'll be talk on the street. Why? Because right now, and how often can you say this? How often can you say, I am one of only 6 million people that owns what is the investment of a lifetime right now? 6 million people is nobody. It's a fraction of a percent. But how many times have we said, coulda, shoulda, woulda? We look back on things and we say, oh my God, if only I had known. It's not that we didn't know. People told us in the past about wonderful opportunities. We just didn't have enough information to feel comfortable making a good decision. We just heard the rumor. And tonight is all about passing along all of the information that you need to make a good decision. XRP is the investment of our lifetime. And if it only goes to $100 a coin, a $10,000 investment is going to be worth over $400,000 in 4 to 5 years. You don't want to miss out on it. Thanks for watching. If that opened your eyes, imagine what a full plan could do for your future. Here's the truth. Riding the crypto bull run is only half the battle. The real question is, what's your exit plan? When to sell? Where to move your profits? How to protect your gains? And how to create a lasting income? That's where most investors get lost. That's exactly why Ken built UGRU. From UGRU Stocks, which helps you to time the market with curated buy-sell alerts, to UGRU Income, our personalized financial planning process that helps you build real wealth, not just ride hype. If you're ready to turn this momentum into a long-term strategy, you're in the right place. Hit like, subscribe, and check the links in the description to connect with us. I'm Digital Ken, and the real Ken and the UGRU team are ready when you are.